Hi, so I'm just here in Singapore. We're just doing a little bit of panic buying, as you do in the supermarket. So I thought I'd give you an update on today's PMI day for a couple of key places. So the first one was German PMI. So German PMI actually came out roughly where everybody expected, around 45. Now, PMI is the Purchasing Managers Index, and it's basically like a survey of people who buy stuff and how confident they are that they're going to carry on buying stuff. And basically anything above 50 is an expansion and anything below 50 is a contraction. So it's always a good indicator as to what's going on in an economy. But what's really interesting is the Chinese PMI data. So last month's PMI for China was, well, the last time PMI was published, it was at 35, which is a massive contraction, and I think the smallest number they've ever had in China since they started measuring PMI. And actually this last month that they've just published is now 55, so it's now into positive territory already. So effectively what that's showing is that their economy has sprung back. Now this is quite interesting. I think this has a few different ramifications. So one ramification is that it will obviously be very positive for what can happen to economies elsewhere in the world when they come out the other side of this this crisis. And I think the other important one is possibly for oil. So oil has had two major challenges. The first one is that Saudi Arabia and Russia are having a bit of a spat over production levels. So they've been overproducing like crazy and having a price war. But the backdrop has been a massive dip in global demand. Literally with nobody flying, nobody driving and nobody going to work. The demand for oil has gone through the floor, national reserves are spiking, and there's just tons and tons of oversupply in the market. But what that means is it's basically meant that most oil producers are underwater. They can't afford to suck it out of the ground for the price that they're currently selling it for. So you get the kind of idea that won't go on for too long. So somebody will do something to fix that. But obviously having China back online, being the largest consumer in the world of hydrocarbons, then that gives some positive demand side for oil. So hopefully that will help there. And I think generally, although oil is good for the consumer in the US, and the US economy is 70% consumer driven, there is also a huge oil and gas industry in the US. It's the largest producer in the world, and there's an awful lot of debt associated with oil and gas companies. So there's a huge part of the credit market that is exposed to oil and gas, and then that huge part of the credit market obviously exposes banks' balance sheets to oil and gas as well. So there is a horrible domino effect that happens when you have incredibly low oil prices. So that's just some things to watch from today. Stock markets are red on the futures, and they were red yesterday. So we are starting to see a sort of slow, steady daily decline over the last few sessions. No one knows where it's going to go from here, but it's obviously a very news-driven stock market, because there isn't really the data to support any of the prices at the moment. So it's all guesswork, and it's just one person's guess against another, and let's see how it all starts to pan out over the next few weeks. But yeah, I'm quietly confident that Italy's numbers are still coming down. China's shown that it can spring back after it gets back to normal, and I think that bodes very well for the future. But it's going to be a pretty slow next 2 to 4 weeks until I think we start to see any real shoots of green recovery and interest. So yeah, this is just one that we all have to sit out. So hope you're staying safe, have fun, see you soon.